close to 6% at this point. On the flip side, you have Paris Defense, where seemingly there is profit taking. It's down about 5%. Jubilant Food Works, on the back of its quarterly update, the lowest quarterly growth in 6 quarters, down about 2.3% in trade right now. That's despite a double-digit same-store sales growth in the Domino's India branches. Sham Metallic also losing about 1% or so. But let's focus on one other stock this morning, and Chennai Petro is in the news as a company has shown its dominance in the sector with a year-to-date change of 22%, and this is an uptick, but the stock is down about 2.7% or so. Somit is joining in to tell you about how this company stacks up against its peers and whether there's an opportunity here. Somit?
Well, yes, Chennai Petro Petroleum in the last 1 month has outperformed its peers. If you look at the gains that we have seen in the last 1 month, it's around 19%, while for other oil marketing and oil refining companies, it's anywhere between 7 to 9%. And we are talking about MRPL, HPCL, IOCL, and BPCL. So why Chennai Petro has outperformed in the last 1 month is because of higher gross refining margins. Gross refining margins, if you look at the Singapore gross refining margin, which is the Asian benchmark, in the first quarter has averaged at around $5 per barrel, which is the highest that we have seen in the last 7 quarters, that is since Q3 FY24, when it was around $6.7 per barrel. And so far in the second quarter, it's averaging around $5.1 per barrel. Now, what is this gross refining margin? This is what an oil refining company earns from processing every barrel of crude into usable products like diesel, petrol, ATF, and other products. Now, why Chennai Petro has outperformed in the last 1 month? Because Chennai Petroleum is a pure play oil refiner, unlike other oil marketing companies like Indian Oil Corporation, BPCL, and HPCL, which also have the marketing segment in their unit. Along with this, Chennai Petroleum produces more of high margin products like diesel. Now, if you look at the production slate for Chennai Petroleum, the average diesel production from Chennai Petroleum is around 50%, while the average of other oil marketing and oil refining companies stands at around 45%, which is clearly 5 percentage points more for Chennai Petro. Also, ATF, which is again a high margin product, Chennai Petroleum's average production is around 10.3% of the total production, while for other oil marketing and oil refining companies, it stands at around 8%. So because of this also, Chennai Petroleum must have been one of the most preferred in the oil marketing and the oil refining space. Now, why diesel margins are higher? Because the impact of EV adoption is less when it comes to diesel specifically, and also there are supply constraints in the market which have kept the margins for diesel on the higher side. Now, why investors are not preferring oil marketing companies here? Now, one of the reasons is because the marketing business. Now, because of the volatility in the crude oil prices, the marketing business also sees a lot of volatility in its earnings, and that could be one of the reasons. And second is the LPG subsidy losses, which have been looming over the oil marketing companies, but not Chennai Petro, given the fact that it is a pure play refiner. Now, MRPL is also largely a pure play refiner, but why MRPL is also not among the preferred? Because it has few retail outlets, which brings in the marketing exposure. Then apart from that, it is relatively higher debt and capital expenditure plans as compared to Chennai Petro, and also the dividend payout for MRPL is lower compared to Chennai Petroleum. And if you look at the GRM sensitivity as well, Chennai Petro clearly stands out with every $1 per barrel rise in the gross refining margin. Chennai Petro's EBITDA increases by nearly 26%, while that of MRPL, IOCL, BPCL, and HPCL increases anywhere between 8 to 24%. But given the sharp rally that we have seen in the share prices of Chennai Petro, if you look at the consensus target price, it is largely at par. 773 was the consensus target price, while Friday's closing price was also at around 774, 772, which means the return potential is not much, but that is the case with every other oil refiner and oil refining companies. For IOCL also, the return potential is just 4.5%, BPCL 3.2%, for HPCL it's flat, and for MRPL it's negative 10%. And if you look at the valuations, yes, valuations are expensive. In fact, Chennai Petro is one of the most expensive oil refining and oil marketing company. 12.9 is the 12-month forward PE for Chennai Petro, whereas the 5-year average valuation stood at around 9.8 times, and that is the case with all the oil refining and the oil marketing companies. But Chennai Petro stands out as it is the most expensive oil refining company currently.
Just a quick follow-up, Somit, with regard to headwinds for the likes of IOCL, HPCL, BPCL. Would you say that the under-recoveries for the subsidies that has been a bit of a problem, if that gets taken off the table, do you think that there would be a re-rating?
Well, yes, definitely there's a news. If the news of government making good the subsidy amount comes in, it will be a positive trigger coming in for the oil marketing companies, because it has been weighing on the share prices of the oil marketing companies for a very long time.
Absolutely. Somit, thanks so much for joining in. Very interesting takeaways from what Somit has just pointed out, why Chennai Petro has been a preferred pick over the course of the last month or so. We've got Brijesh L of IDBI Cap joining us this morning, as well as Saurabh Jain of SMC Global Securities. Gentlemen, as always, very good morning to you, and thanks so much for taking the time. And incidentally, we've also got our first caller of the day. Pradeep is calling us from Visakhapatnam. Very good morning, Pradeep. How can we help you today?
Yeah, good morning. Thanks for taking my query.
Please go ahead. It's our pleasure.
I have 900 shares of Inox Wind
Okay.
at 176.
Okay.
Can I know what's the upside for it? It has been 2 months since I have bought that stock.
Okay.
I'm waiting for a period of 2-3 months.
2-3 months. Okay. So, Brijesh, then from that perspective, let's talk about the charts and what the potential is on the technical indicators. What would you say is the upside potential?
Hi, morning. So I think previously this went up to 197 and then gradually it has come down. So I do believe that this is in a conservation phase, and sooner or later this can go back to that 197, 200 levels. So I think if he's willing to hold for another 2-3 months, so I think there's an opportunity and he may see that 200 levels again. And once post the 200 is taken out, this will turn into positive territory and then it can go back to 220, 225. So I think he should hold, and 200 for sure is what I can see.
200 for sure is what you can see. All right. Let's take the first question from Dindima Shankar, who's writing in from Mysuru. Bought 140 shares of BSE at a price of 2,988, and this is 45 days back, currently at a loss of 48,000 or 45,000 now at this point because of a bit of a bounce back in the price to 2,664 or thereabouts. And so, Saurabh, on the fundamentals, really the question is the bit of a knock that the stock took at the end of last week on account of this Jane Street issue. Would you say that that is going to be a short-lived bump in the road, or do you think that it's going to have a longer-term effect? Seemingly, the exposure to entities like Jane Street is not very high, and so one would assume that they will weather this as well. But the question is, are valuations still attractive, and would you hold on?
In my opinion, hi, good morning. In my opinion, valuations are quite expensive in every part of the world. If you see, stock exchanges do not rule at these such high valuations. I mean, there is certainly a growth. If you look at the March numbers, there was a good amount of, I think, 100% kind of a growth from the if you compare it with the sequential numbers. But in my opinion, I think trading at 25-30 times to book value, high multiples, I find this stock quite expensive. In my opinion, I think you should get out whenever the stock reaches to your buy price.
Yeah. By the way, Jeffries on BSE saying that Jane Street's ban may impact volume. So it's not a complete given that they will come out of this unscathed entirely. There are, of course, contradicting views on this one. All right, so it's a sell based on the fundamentals. We've got a next caller, Sanjay Pandya, who's calling us from Gujarat. Sanjay bhai, thanks so much for calling us. How can we help you today?
Yeah, I have ITD Cementation.
Okay.
At the rate of 69.
Okay.
I am holding this from 2022.
Okay.
What can I do? I go for partial profit?
Okay. Let me ask this question to Saurabh. Saurabh, what a run he has had, and congratulations, Sanjay, for holding for as long as you have, because it's been a pretty frenetic, pretty crazy rally for ITD Cementation. So bought at levels of 69, Saurabh, which is a very attractive buy price, and he's got 1,000 shares sitting on gains of over 8 lakhs at this point. Should he take some money off the table?
I think the company is very good. The stock has got re-rated recently. I mean, in the last 1-2 years, and there is a stupendous rise. Yes, I think in my opinion, you can take some money off the table. But since the company is posting good operational numbers, and the second half after September is likely to be even better for the company, so in my opinion, I think you should hold the rest of it and book some profits.
Okay, and when you book those profits, where would you deploy them at this point, Saurabh?
We find hotels, capital goods, banking, infrastructure companies good. In the banking, you may opt for ICICI Bank. In the capital goods segment, in the infrastructure segment, you can go for the L&T, KEC International type of companies. In the hotels, you can choose for companies like Lemon Tree.
Got it. Okay. So there are several options for you to choose from. Hopefully that answers your question. And anybody else that is looking to deploy right now, those are Saurabh's top picks at this point. But let me take the next question on IRFC. And we've got NR Saraf who's writing in from Hyderabad. And he's asking about whether or not it should be held at this point. He bought 60,000 shares at a price of 121.6 rupees. And so as a result of which he's making a decent profit of as much as 11 lakhs. So quantum wise, it's very large, but in terms of appreciation in price, it's not a very significant amount. He says that he has bought it a while back, last year. What would you say about this, Saurabh? Would you hold on to this for potential upside or would you book right now?
I think the valuations have subsided a lot. Now it is trading at a much lower valuation, about 3 times to book value. But the profitability is also coming down since this is a finance company, and now they are looking for some different areas of financing also. So in my opinion, I think since you have purchased a large quantity, I don't know about the rest of your portfolio, but still I can say that maybe the stock would oscillate in a small range the way it has been doing for the last few months. So I think it is better to take money off the table and keep holding rest of it.
Okay, all right. And what quantum would you suggest taking off the table?
I don't know what is his total portfolio, but since 60,000 is a large quantity, I would suggest him to book at least 40-50%.
40 to 50%. All right. But yeah, and understandable, because if you think about it, very large concentration is something that you should avoid unless you're absolutely confident about the future potential of a stock. All right, let's take the next question. And we've got Shankar calling us from Bengaluru. Shankar, very good morning to you. How can we help you today?
Good morning. See, I am having 12 shares of Tube Investment.
Okay.
Bought at 2643.
Okay.
Now, it has not made any significant, it has not shown any significant rise. Though the company is good, the pedigree is good, but it has not made. So I just wanted to know whether I should book out of it, or should I hold it for another term of 2 years, 1 or 2 years.
Got it. And when did you buy this?
This was in September 22.
Okay, September 22. Okay, so I understand your frustration, Shankar. Let me go to Saurabh on this one. Saurabh, on the fundamentals, he's had a fair degree of patience with this company. Should he hold on or are there better prospects?
I think it is a very good group, Murugappa Group company. I think the company has always delivered strong set of numbers. I think the valuation in the short span got stretched and now the valuations have corrected a lot. In my opinion, I think it is a good company to hold for next 2 years.
It's a good company to hold for the next, you said 2 years, right?
Yes.
Yeah, 2 years. All right. Relatively shorter term question coming your way, Saurabh, on RVNL. If I remember correctly, it did win an order as well today, unless I'm mistaken. Tom's Verghese is writing in from Bengaluru, bought at levels of 432, this is RVNL, and so he's incurring a loss. He's looking to hold for at least another 6 months, but he's wondering whether to hold for that time frame or to exit at this point. So 100 plus crore order that they announced today, not moving too much, but then quite a few small orders coming through for this company as well, Saurabh. Once again, you're seeing that trickle of orders coming through. Would you hold? What are the prospects on the earnings front?
See, on the earnings side, you get visibility on the revenue side, but if you look at the margins and the profitability, it is not at par with the valuation at which the stock is trading in. I mean, still after a lot of correction, the stock is trading about 9 times to book value, which seems to be quite high. And in fact, the operational numbers do not suggest that the pain is over. 6 months time frame is quite a shorter time frame. I would suggest to look for the opportunity to get out of the stock.
Okay, look for an opportunity to get out is the view on RVNL. If you are to stay within that overarching space though, maybe play the railways theme. And I hesitate to ask, but I will also include manufacturing and defense, even though several of these stocks are now at multi-year highs in terms of valuations. Would you buy anything right now?
See, if you look at the defense space, only company that I like is Bharat Electronics. Otherwise, in many of the companies we will find, while the stock prices have gained a lot after the recent corrections, but on the operational side, the numbers are not suggesting that valuation. I mean, the companies are not giving that into the numbers. The profitability and the revenue growth is not visible. So, in that sense, I would suggest you can also go for companies in the construction side, like maybe HG Infra.
HG Infra. Okay, HG Infra is something that you can maybe research on. Yogesh is calling us from Jaipur. Yogesh, very good morning to you. PNB is something you want to know about?
Yeah. Good morning, Guru. Thank you for attending my phone. So that actually, I want to know that I have a PNB for nearby COVID times.
Yeah, very attractive buy price, I see, 32.5 rupees.
Yeah. Or last time I missed it was on 140 something. I missed. I think it will go up.
Right.
Now what I do for that? Actually, I have a good profit in my side.
Yes, but then question for you, Yogesh: do you need the money right now?
No, I don't need money. Actually, I am an investor, and last time I talk about my ITC and everything. I booked a lot of the profit.
Right.
This time I have 3-4 stocks inside. Both are actually I am getting a lot of profit inside.
Yes. Okay, so you want to know whether to take some money off the table, whether there are better prospects than PNB.
Which stocks I will go for next.
Understood.
That is my query for you.
Understood. So then from that perspective, Saurabh, the question to you, it's been a little bit of a stop-start rally for the PSB or public sector banks. And Punjab National Bank, in the ranking of public sector banks, I think a lot of people pick the likes of State Bank of India first, or something like even a Canara Bank I've heard people talking about. So would you say that he can hold on to the gains that he's made in PNB, or are there better prospects in your opinion?
See, first of all, we have a positive view on the PSBs. We feel that the valuations are comforting, and in contrast, they are putting up a good show. Also, there is an expectation that the credit growth will also get boost in the second half after the recent RBI cut and the cut in the cash reserve ratio also. With respect to the PNB, it is floating at 1 time to book value. The NPAs have come down. The GNPA have come down. There was a bit of pressure on the NIMs, but it was seen across banking, PSU banking. In my opinion, I think it is still a good stock to hold.
It's a good stock to hold. Okay, Yogesh, hopefully that answers your question. PNB you can continue to hold because Saurabh likes the public sector bank pack. All right, Ajit Talke is writing in from Pune, and he's got Suzlon Energy that he's bought at a price of 66.5, which is very close to the current market price, and he's got significant quantity, 1,750 shares. He's looking at a short-term view for the next 6 months. So, Brijesh, on the charts, what would you do with this?
Yeah, so basically the short term, I think 2 weeks before the stock has taken support, and then maybe 73, maybe close to 75, and that levels can be seen. So it is a hold, and he should review the position when it goes back to 73. So on immediate basis, I think some strength is coming in.
Okay. All right. On an immediate basis, some strength is visible in Suzlon and you can hold. Where would you put your stop loss though?
Yeah, so the stop loss would be below that bullish candle, which is 62 as of now.
62. So watch out for that as well. We've got our next caller. Bhupender is calling us from Chandigarh. Bhupender, namaskar. How can we help you today?
Namaskar, sir. Good morning to everyone. My question is on Canfin Homes. I purchased 102 quantity at the rate of 810.
Right.
So just my view is for the short term only. So just wanted to know what is the target or what exactly will be the scenario for the short term.
Got it. And how do you define that short term, Bhupender?
It's 1 or 2 months only.
1 or 2 months. Okay. All right.
Yes.
So, Brijesh, on the charts then, 102 shares bought at 810 rupees. What is the potential upside and where would you put your stop loss?
I think on an immediate basis, there is a rounding structure, and I believe this can go back to 850 levels. So the formation is strong, and maybe before the results and all that, there can be some move we can anticipate in this. So I think you should hold on, and maybe 30-40 points from the current level, you should take some profits.
Okay. So, do you have a view on option strategies, Brijesh? I'm just checking.
I do have it. I just need to give it time. I'll just check whether what is happening.
Okay. Let me tell you what the question is. And by the way, viewers, we've not been taking too many questions on the options side for obvious reasons. But Shriram has got a question on Axis Bank specifically. As I understand it, he's got the 1,250 call. I'm assuming that he's talking about it in the July series or in the near-term expiry. I'm guessing that he's talking about this Thursday. I'm not sure when the expiry is. But 1,250 is the strike. He's got an average price of 30.8 that he has paid, and so he's incurring a loss at this juncture. What should he do?
So, Alex, right now, 1250 call option is selling at 5 rupees 25 paisa.
Right.
That is, and let me check it from the technical perspective. And 1225. So okay, fine. So I think he has bought, and recently there was a big correction in the Axis Bank. So what we can do, as long as this 1150, 1160 level is not broken, I think there is a chance. And this is for the full month. It is a risky bet, but if he's willing to take some risk, then he needs to average that trade at this price, or maybe he can buy 1200 call option, or maybe the 1180 call option, and that is how he can protect his losses. And because the Axis Bank has fallen so much, there is a probability that this will go back to 1200, 1220. So that is the maximum bounce. So if he can buy in the money on call option, maybe like on maximum at the money, which is almost close to 1180 strike price. If he does that during the month, if the stock moves up, you will get one opportunity to get the exit route. So I would advise him to just exit that particular call and buy 1180 a fresh call.
Yeah. Okay. There you go. So he's clarified that 31st of July is his expiry. So be very careful when you're engaging in these strategies, because sometimes they can go off and you can lose a lot of money. But let's take next caller. Arun is calling us from Bengaluru. Arun, very good morning. How can we help you today?
Good morning, Alex. Good morning, everyone. So my question was on the CDSL. So last Friday I bought CDSL. I added CDSL. In fact, I had 20 shares earlier. So I bought 34 shares on Friday. So I'm sitting with 15k profit. So my question was on whether I should rotate, whether I should add more or sell the CDSL allocation to BSE, or whether if CDSL is looking strong on the charts, then whether I can add more on BSE.
Okay. All right. Saurabh, do you have an opinion on this? I'm guessing you heard the question. It's about the pair trade of CDSL BSE.
See, I feel that CDSL is quite expensive, trading at higher valuation. After it saw a huge correction, now it has made a very good smart comeback too. I think in the short term he's making good amount of money. There is a chance that the stock may falter because on the operational number side, if you see March quarter's number, they were down both sequentially and year on year, and I feel June will be no different. So in my opinion, I think it is better to take money off the table. Exit is the call.
You on CDSL, it has made a very, very substantial up move in the last 3 months, as you can see on that chart. It's time for a very quick break. I understand, Brijesh, that you have to leave us. So thanks so much for joining us for the first half of this show. We'll be back on the other side to take more of your questions, so do stay tuned.
पास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today
All right, welcome back. You're watching Ask Profit, and this show gets you answers to all of your stock-related questions. On this side of the break, we've got Ajit Mishra of Religare Broking as well as Saurabh Jain of SMC Global. Ajit, very good morning to you, and as always, welcome to the show. Thanks so much for joining us. Ramya from Chennai has got the next question, and this one's directed at you. Between Shriram Finance and Bajaj Finance, for the short term, which stock looks more promising?
Yeah, good morning, Alex. So, Alex, both stocks are doing well. Means both are trading closer to their record highs of late. Shriram Finance had made an attempt of a decisive breakout from the consolidation range, but it couldn't sustain, and followed by a marginal pullback towards the short-term averages. But comparatively, still, I feel that Shriram Finance is better placed, considering that we are still holding around the short-term averages, while the Bajaj Finance, the tone looks slightly sideways to us, considering multiple resistances on the upper band of this prevailing range. So with short-term point of view, 660, I believe, is a very strong area now, as we have multiple attempts of profit taking also earlier, which usually witnessed by strong buying interest around that area. So with that as a stop loss, she can consider accumulating at current levels. And once we cross 710, 715 area, then probably 755 to 760 is something that the stock might attempt. So the risk reward is favorable. She can consider accumulating at current levels.
All right, so that's a view on the pair of Shriram Finance as well as Bajaj Finance. We've got our next caller, Murli from Bengaluru. Murli, very good morning to you. How can we help you today?
Good morning, Mr. Alex.
Good morning, sir.
Thank you for taking my query.
My pleasure.
And my good wishes to the panelists also, experts who are answering. My query is on Belrise Industries.
Okay.
A recent listing at 90 rupees it got listed, and I got some allotment and I sold at 106. On analyzing the public issue, I found out of 2,600 crore raised, they are going to use to repay the debt around 1,600 crores, which is 55% reduction in that debt, which will lead to about 1 to 2 rupees at least EPS upgradation on interest saving alone. Can I, at this stage, can I buy? I sold at 106. If it comes around 100 rupees, the public issue price is 90. If it comes around 100 rupees, can I buy? For a long-term hold with 18% return per annum, around, I'm expecting a target of around 120 or 122 in a year's time. Or can I instead invest in Tricol or Albaras, which is around the same PE range, around 20 to 30.
Okay, the second
How
company...
about the other big companies which quote around 40, 50, Endurance Technology, which are quoting around 50, 60 PEs.
What is the second company that you spoke about? You said Precol?
Either Talbaras Automotive or Tricol.
Got it. I got it. All right. So, Saurabh, it's a pretty well thought out question. He says that he's booked profits from that listing pop that he got. He got allocation, got out at 106, but he's talking about the reduction in the debt that is on the cards. And so, therefore, EPS improvement going forward is an 18% rise in the profit, 18% rise in the stock price possible over the course of the next 12 months. What's the view on Belrise? And if not Belrise, would you buy Pricol or Talbros Auto?
See, in this market, all the IPOs are coming like price to perfection. That is why we are not seeing good opening or good margin after the listing. In the case of Belrise also, you can certainly assume that the stock is priced to perfection. That is why the stock is quoting at 103. Otherwise, if there was any kind of a discount in the valuation, then the stock price would have been much higher. Now, since it is a new listing, I would suggest better to wait for 2-3 quarters how the management gives guidance, what kind of earnings pans out. With respect to the two stocks that you have asked, Pricol and Talbros Auto, I feel Talbros Auto is much better company out of the two.
Got it. All right. All right. And of course, Murli, as always, I would invite you to do your reading and research on Talbros as well and call us again perhaps tomorrow or day after. All right, Rohan from Pune has got the next question. I'm just going to take a chance and ask you this, Saurabh, because it's a pretty small company. SG Mart is the name of the company. It is just under 4,000 crore rupees of market capitalization. It offers several products, I believe, in the steel construction product space, TMT rebars, as well as welding rods and binding wire, various other things. So what are the prospects if you've studied the company? We've got Rohan from Pune who has modeled this company for a period of 5 years, and he wants a long-term perspective on the stock. He wants to know whether he should buy at this point.
I haven't covered this company, Alex.
Okay, fair point. Ajit, I'm just going to take a chance and ask you, it's SG Mart. SG Mart. So Solapur and Gujarat, SG Mart.
Alex, I don't have the data available for this stock. I guess listed only in BSC.
Yeah.
So I won't be able to comment.
Well, you can't say that we didn't try, Rohan. We tried. Do write and ask if you've got another question. Murli from Palakkad has got a question on Anant Raj, which he's bought 700 shares off at a price of 501 rupees. He says that he purchased the stock thinking that it had good top line as well as bottom line growth, and also on the back of the guidance by the management, the land bank that they have in the Delhi NCR region, and also now invested in data centers. He's wondering whether the price decline that we've seen, and let's pull up the year-to-date chart if we can, if it can reverse. So it's dropped quite substantially. Coverage on this stock, Saurabh, what's the view on the fundamentals?
Because of the data center news, the stock got re-rated very handsomely, and then came the good amount of correction also. Now the stock is oscillating at a valuation at which in the past it had traded a lot. So in my opinion, I think if you talk about on the real estate activity, the company is doing good at that point, and the data center is the icing on the cake at such valuation. And since you have bought at a 501 rupee, you are getting approximately 10% profit. I think now it is a good time to hold for long.
Okay. It is a good time to hold for the long term is a view on Anant Raj. All right. And it's not too far away from the buy price as well. Okay. So we've got the next question from Kanti Bhai, as I see it, Kanti Bhai Mahasuri, who's writing and asking about V2 retail. He wants to buy for a period of 3 months. The update, if I remember correctly, the quarterly update was a decent one in the context of everything that was announced. And indeed, the stock is up another 4% in trade today. So, Ajit, on the charts, the last week and this week put together, it's been a decent run, if I remember correctly. There you go. It's up about 12%. Would you buy at this point for 3 months?
So, Alex, we all know the kind of run-up that stock experienced from May or June 2023 lows. So maybe it was around 77, 75 area to 2000 levels. Since the beginning of this calendar year, the stock was experiencing consolidation, and that too in a very tight range while holding above its major averages. and now it seems set for the next leg of the year move. But since the earnings season is about to kickstart, obviously we have to be slightly cautious with the high beta names. So here, with stop at 1800 on the closing basis, definitely you can consider going long at current levels, because it seems like that the base formation is done. And once we have a breakout above 2100 mark, then probably we have a confirmation also towards 2300, 2400 levels. So yes, the overall outlooks look positive. With 1800 as a stop loss, you can consider going long.
Okay, you can consider going long on V2 retail. Okay, the next caller is Arvind from Uttar Pradesh. Arvind, namaskar. How can we help you today?
नमस्कार सर. नमस्कार सर. सर मेरे पास गणेश हाउसिंग के शेयर हैं 50 सर
जी.
वो आज ही मैंने लिए हैं सर 1004 के रेट पे.
क्या बात है.
और मैं सर इसको और भी लेना चाह रहा हूँ, पर मैं एक चीज मैं पूछना चाह रहा हूँ ये कि मार्केट में दो टाइप के एरर होते हैं, एक एरर ऑफ चॉइस, एरर ऑफ टाइमिंग. तो ये अगर मैं लंबे समय के लिए लेता हूँ तो प्रॉफिटेबल रहेगा, क्योंकि मैं एरर ऑफ चॉइस की तरफ नहीं जाना चाहता.
देखिए, अगर हम ये जवाब दे सकते तो फिर आई थिंक एवरीबडी वुड बी मल्टी बिलियनर्स ना.
एक सर मैं आपने बिल्कुल सही कहा, पर मैं चाहता हूँ कि कम से कम मैं एरर ऑफ चॉइसिंग कम से कम करूँ, मतलब ना के बराबर करूँ मैं.
जी जी. और आपका होल्डिंग पीरियड क्या रहेगा इस पे?
होल्डिंग पीरियड सर मेरा 3 से 5 साल का रहेगा.
3 से 5 साल का. अच्छा, तो आपने लॉन्ग टर्म के लिए ले लिया है ये. ठीक है, ओके. तो
और एक्चुअली आज ये ब्रेकआउट भी किया, 20 SMA के ऊपर गया काफी समय के बाद से, तो इसलिए मैं भी.
ओके. तो मैं फंडामेंटल एक्सपर्ट से ले लूँ ना ये सवाल?
यस सर.
तो सौरभ, ये सवाल ये है कि he wants to reduce error of choice and so he has gone ahead and bought. The point is that he wants to buy more. What are the prospects for the next 4 to 5 years? और आप हिंदी में जवाब देंगे प्लीज.
हाँ जी. देखिए गणेश जी, मुझे पता नहीं आपका टोटल पोर्टफोलियो क्या है, लेकिन अगर आपने ये शेयर 50,000 रुपए के ले लिए हैं और आपका पोर्टफोलियो में ये 3 से 4% है, तो मैं समझता हूँ कि ये काफी रहेगा, क्योंकि एक छोटी कंपनी है, स्मॉल कैप कैटेगरी में ये कंपनी आती है. मैं समझता हूँ कि आपके टोटल जो भी पैसे होते हैं उसमें आप 16 से 18 शेयर आपके अच्छे डाइवर्सिफिकेशन का काम कर जाते हैं. और गणेश हाउसिंग यदि आपके पास 1 या 2% है, तब जरूर आप इसमें ये डाल सकते हैं. अन्यथा मैं कहूंगा कि आप फाइनेंस क्षेत्र में, बैंकिंग और फाइनेंस क्षेत्र में और भी कंपनियों का चयन कीजिए. जैसे कि हम बात करते हैं आईसीआईसीआई बैंक की या कैनरा बैंक की, तो ज्यादा अच्छा रहेगा. और सॉरी, ये क्योंकि कंस्ट्रक्शन क्षेत्र में है, तो मैं समझूंगा कि मे बी आप एचडी इंफ्रा वगैरह के साथ भी जा सकते हैं, या डीएलएफ जैसी कंपनी के साथ भी जा सकते हैं. तो ये मेरा विचार रहेगा. और जो आपने 50 शेयर लिए हैं वो आप बिल्कुल लंबे समय के लिए होल्ड कर सकते हैं.
बिल्कुल. ऑल राइट, थैंक्स सो मच फॉर दैट व्यू. एंड अरविंद, कॉल करने के लिए बहुत बहुत धन्यवाद. लेट्स टेक द नेक्स्ट क्वेश्चन. एंड सुधीर अग्रवाल इज राइटिंग इन फ्रॉम द NCR, which is the National Capital Region, and he's asking about EaseMyTrip, which has been a rank underperformer. It's not doing anything. It's just about at 10.4 or thereabouts. It's had its share of troubles in the recent past. He says that he's bought at 11.3, which is not too far away from the current market price. And he's saying that he can stay invested for a period of 2 years. His targeted upside is 40%. Is that possible? And if it is not a good investment, in your opinion, Saurabh, can he move to something else? If so, what?
I think travel and tourism industry is particularly doing good, and that is not the case with the EaseMyTrip. They have ventured into they have talked about different verticals, different businesses also, and the promoters have offloaded their shares also. At one point of time, it got too expensive, and now it is correcting like anything. In my opinion, I think you should take money off the table. I mean, you can book losses in this company and maybe shift to companies like maybe Indian Hotel or Leather.
Okay, all right. So if you want to stick with the travel and tourism space, then these are the options you can consider. Hopefully that answers your question. Vijay is calling us from Madurai. Vijay, very good morning to you. How can we help you today? Vijay, can you hear me? Okay, we'll wait for Vijay to call back. In the meanwhile, let's take the next question. Subramanian Padmanabhan, and this is sir, I'm going to say your name only once. It's probably a name that is as long as mine, but I also go by Alex, so I'm going to call you Subramanian. Saurabh, I'm going to come to you on this one because his question is on HDB Financial, and he's got a medium-term outlook on this one. He got allotment during the IPO. What is the potential upside that you see in this one?
I think again I would say that all the issues which are of late are coming at price to perfection. That is why we are seeing no premium getting after listing on the bourses. In the case of HDB Financial, it is a very good company for the long term. But you have to think that their portfolio is a bit risky too. They have approximately 25% of the portfolio which is unhedged. I mean that is not backed by any collateral. So that is the riskiest part. And for the long term, it comes from a very good group. You can hold.
Okay. By the way, in case you were wondering, Subramanian, my name is Kochupurakil Matthew Alexander, which I don't use very often. So that's why I was saying that it compares with my name. All right, let's talk about the next one. Gautam Shenoy from Bengaluru is asking the next question. He's recently purchased Siemens at lower than the current market price, 50 shares, and he's wondering whether this investment will give him a decent return over the course of the next 1 to 2 years. So this is Siemens Energy, I must clarify, that he's talking about. I do not know exactly what the buy price is, but it's assumed that it's close to the current market price. What's the view on the fundamentals, Saurabh? Would you hold for 2 years, and what is the potential upside that you would see?
The expectations are very good from the Siemens Energy. It is a demerged company, recently demerged from Siemens. And from the long-term perspective, yes, I think it is a kind of a portfolio stock. You can definitely hold.
Okay, all right. So it's a hold on Siemens Energy. Raj is calling us from New Delhi. Raj, very good morning. How can we help you today?
Good morning. First and foremost, I must congratulate you. Brilliant programming.
Thank you, sir.
I have a very straight question.
Okay.
I bought Tata Motors when the COVID fall happened. I bought that for 74 rupees.
Yes.
I have close to about 5,000 shares on that.
Yes.
Sitting on a fat profit, want to understand, do I book this? Because even if the share jumps up by about 10%, I actually double what my investment is. So I'm in a bit of a fix in terms of what to do about this. Really.
Yeah,
and it's come off the highest quite a bit.
Yes.
So I don't mind holding this endlessly as well. So just need advice, preferably sort of a possible.
So Raj, what will help us give you a better answer would be a little bit of context on how much this is as a part of your overall portfolio, even if you can give us an indicative value. And how many stocks do you own? Do you own many companies? Is this one of a few companies? How does it stand?
Well, I have, but if you look at from the investment point of view, it accounts for less than 2%.
Okay.
But that's my buying price, right?
Sure.
Not the current market value.
Yeah.
At the moment, it's probably about, I'd say, between the vicinity of about 3 to 4%.
Understood.
Of my portfolio value at the moment.
Yes.
But like I said, I don't mind holding on to this endlessly.
Yeah.
A lot of, I can hold this on as long as you want. But so it's come off the highs. It doesn't seem to be gathering momentum, but I don't mind waiting long term as well.
So it's a good question, and you don't want a situation where you lose out notionally as well, right? So I got your question. Saurabh, the question then is for you on the fundamentals. There are so many headwinds that we're talking about with regard to TAMO, and not least to which is what is happening with Jaguar Land Rover. And a lot of things are in the air, right? So if you have China that could slow down, you have the US that could slow down. These are already two very important markets for Jaguar Land Rover, and Jaguar is going through its own period of rebranding or whatever you call it. Tata Motors has to go through its phase of whatever it's doing in terms of the split of businesses. So many things that are in the works right now. Would you hold on to this? It's a substantial amount that he's holding, but he's not in a hurry, as he's pointed out.
I think many of the things you have already told, Alex. I think domestic business, it is an Indian MNC. Domestic business, makes up a small part, and largely it is a Land Rover and Jaguar business, which is not doing well because of the China, Europe, and the US. In my opinion, domestic sales are also dwindling. So, in my opinion, I think even if it makes up 3-4% on the current valuation, also, I would suggest him to take money off the table and rather switch to a domestic story called Mahindra or maybe Eicher Motor for that matter.
Okay, so there you go. I mean, it makes sense. You would be booking out 12.5% on long-term capital gains tax. Bear that in mind. But the prospects, at least, Raj, on Mahindra and Mahindra, because it's firing on all cylinders at this point. If you look at its utility vehicle sales, if you look at the uptake of its electric vehicles and the fact that tractors could well return to the fore if monsoons are positive and all things working in favor at this juncture. So bear that in mind. We've got a next caller, no, not caller, next message from Bengaluru. We've got Kishore who's saying Namaskara, and he's asking about Transformers and Rectifiers Limited, which he's bought at a price of 529.4 rupees per share. So he's incurring a bit of a loss at this point. A lot has been said about this company, Saurabh, and I have to come back to you because he's asking about the fundamentals and the potential for the next 2 years. The question is not about the fundamentals, really, it is about the valuations. Would you agree and would you hold on?
Yeah, I think if I'm not wrong, on the bottom line, it is still the company is still not making profits. There is expectation that it is a good company and it will make a killing in the future. But at the same time, at these valuations, it is expensive. You have to have a clear mindset of holding this company for very long, and then
I must clarify. It is making a net profit in the quarter gone by. The profit stood
on trailing 12-month basis. Maybe this company is not making profit. I feel.
No. 216 crore in the financial year ending March, and so therefore it is multiples higher than what it was in the previous financial year. It is making money.
Okay. It makes sense for the long term to hold.
Okay. All right. So that's the view on Transformers and Rectifiers. Vikash is calling us from New Delhi, I believe. Vikash, very good morning to you. How can we help you today?
Hi, sir. Good morning.
Good morning. Please go ahead.
Okay, so I've been holding Bajaj Housing Finance after the IPO was done, and I have bought around 300 shares at an average of 142.95.
Okay.
And I have seen the performance of the company, the results of the company has been positive, but the shares have been falling. So wanted to get a view on that.
Yeah, okay. And am I right in assuming, Vikash, that you bought for the long term?
Yeah, I thought about long term, but at the same time, the results were beforehand also good, and after the IPO was also done, the result was good. So still I'm holding with a hope, but at the same time, just wanted to know for how long.
No, but I just want a little clarity because if you think about it, this is a stock that has gained from that issue price in the IPO by, can we pull that graphic up again if we can, 70% or thereabouts, if I'm not mistaken. There you go. So 73%. The issue price was 70 rupees. And so therefore, a lot of people were excited, Vikash, about this stock. And though the earnings are good, a lot of people are talking about expensive valuation. So perhaps that is the reason why it's not moving too much. That's why I'm asking, before I ask my fundamental expert, what is your expectation in terms of how long you can hold it at this point?
I can even add some quantities as well. I can double the quantity as well. So this wanted to take that because I have a long-term view on that, around 1 to 2 years.
Okay,
so I want to add some quantity as well.
Understood. So 2 years is something that you can hold on the outside. So therefore, Saurabh, I'm coming back to you, and apologies, Ajit, I've kept you waiting, but we're getting a lot of long-term questions. Bajaj Housing Finance, 143 rupees, so slightly elevated levels. The stock has really been range-bound in the recent past, and perhaps to a certain extent that's because of the valuations. Would you hold, would you add more at this point for a period of 2 years?
This is a company which has always grown above the industry average. Yes, you are absolutely right that the valuations have gone off the roof, and that is why there was a correction. With respect to the good amount of growth coming in the earnings, I think it is capping the downside right now. If you have a long-term horizon of 2 to 3 years, then it makes sense to hold because the earnings are expected to be good going in the future, which will keep stock, which will keep pushing the stock from the downside.
Okay, I must point out very quickly, we don't have a view on stocks that are less than 500 crores, so just bear that in mind. It's time for the rapid fire segment. Ajit and Saurabh, I'm going to throw as many questions as possible over the course of the next 2 minutes. First one is on MRPL. 1 year view is being sought. The buy price is 164. Mr. Venkatramanan wants to know, should you hold, Ajit?
Hold, maintain stop at 140, 180 position targets.
Naukri is the name of the counter. 1,400 is the buy price. Short-term trade is being sought. Muthu Rasu from Madurai wants to know, Info Edge. Would you hold, Ajit?
exit looks weak. Around 1300, one can reconsider.
Okay, JP Power, I believe, let's pull up the chart. Okay, the 35 is a buy price. Long-term view is being sought. Prashant wants to know. Saurabh?
Switch to NHPC.
Switch to NHPC. Okay, the next one is JP Power again. So we've already answered that question. Rolta. Okay, I haven't heard this stock in a long time. Rolta invested around the 90 level. Recently bought 900 shares at low prices. So we can't take a view on this one. Unfortunately, it's a penny stock. HCC, Hindustan Construction Company, bought at levels of 30.45. Would you hold at this point? Ajit, on the charts?
SCC, Alex, I guess it has shifted to trade to trade. So that's why exit, it's likely to underperform. So yeah, exit.
Exit is a view. Abbott, oh, okay. Abbott sitting on 2.7 lakhs of profit. Dr. Naveen wants to know whether he should hold or sell. This is a question on the long term, so therefore fundamentals. Saurabh?
Portfolio stock, keep on holding.
Okay, portfolio stock hold. Aniket Hiramat has got a question on Ramakrishna Forgings. He's bought at levels of 623 rupees. He's looking to hold till 2029. Saurabh?
Hold.
Okay, well, that brings us to the end of this edition of Ask Profit. Ajit, as well as Saurabh, thanks so much for joining in and for answering all the questions. Pleasure having you.
Thank you.
All right, viewers, we've tried to answer as many questions as possible. If we didn't get your specific question answered, well, we'll try the next time, and hopefully the questions that we got answered will benefit you. Up next is Know Your Company. Do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Well, I'm joined by newly appointed CII President Rajiv Memani. Welcome to NDTV Profit, sir. So the hottest topic of the season is India-US deal. And yesterday, Minister saying that deal are not time-bound. There is no deadline to it. Then we have West Asia disruption going on. How you see this entire development, how India Inc. is looking at these ongoing developments and in terms of how they are planning their capex and expansion plan, given the uncertainties at this point of time?
Yeah. So I would say I will answer this in two parts. First is, I think in the last 6 months, 9 months, we have seen an entire recalibration of global trade. And the economic order in the way global trade was conducted has completely changed and is in the process of changing. A lot of countries there is a flurry of signing FTAs with countries that you want to build an long-term economic relationship with and where interests are complementary. And at the same time, there are geopolitical disruptions that you talked about that are happening. So from a business standpoint, there is a lot of uncertainty, and business and uncertainty are generally not good friends. So when you have that much of uncertainty, it does impact your ability to plan long-term investments. So a general sense in a lot of these things is let's do 60-70%. But let's not go whole hog. Let's wait for 3 to 6 months. 3 से 6 महीने में क्या हो जाएगा? And then let's see what's going to happen. So I would say bullishness on India continues. The Indian resilience story is very clear. I think there is a tremendous sense of optimism, especially in the way macroeconomic factors have panned out, the way inflation, interest rates, some of the proactive moves made by the Reserve Bank of India. The corporate balance sheets are very strong, debt equity ratios are low. People are trying to see how they can leverage capital markets more actively, raising capital, demerging, disinvesting, acquisition. So there's a lot of that activity happening. So overall, and they know that eventually growth will be rewarded. And for achieving growth, there is capex and there is healthy competitive tension on that. So when a lot of people say that private sector capex is not happening, in my view, last few years will bear this out. Private sector capex is happening. The posture is right. The only challenge is that because of these global uncertainties in the 3 to 6 months, last 3 to 6 months, and hopefully we are towards the tail end of it. You know, as things settle down, people will get a clearer picture to when they were to model tariffs, rates and everything, they'll have a better perspective to say what it will be and where will it be. So I think that's the, if I look at it, that's the narrative that's playing out. Coming to the second of the first part of your question, but on the US FTA, I think India-US FTA is a strategically important FTA. I think what the Commerce Minister said doesn't come as a surprise to me at all. I must compliment him, his ministry, other ministries, other wings of government. I think they have spent inordinate amount of time to understand the issues, challenges, opportunities of each and every sector. Whosoever has wanted to engage with them, I think they've engaged with them. Whether it's a large company, whether it's an MSME, whether it's small sectors like even hand tools, or gems and jewelry or bigger sectors, auto, EV, chemicals. So I think they have had conversations, and through CII, I think a lot of these conversations have been facilitated, and we have seen the level and details that they have gone into. And it's very clear that they wanted to fully understand what are the opportunities, what are the challenges, and how Indian companies will see to it. And then on that basis, try and see what's the best trade deal that can happen. Now, they will not be all winners in this. They will not be all losers in this. But I think as long as in aggregate, India is benefiting from this transaction or from this trade deal, I think industry would be very happy if it happens, because industry doesn't want to be imposed with a tariff of 26%. And especially in, because not so much of the tariff, but when you compare with relative competition with other countries that are competing to invest in the US, then I think it becomes a bit of a challenge. But industry would only be comfortable with it if it's in the broader interest of India. And I think the same, and I think what the Commerce Minister has said has been very reflective of the tone and tenor of the government, and I think the industry is fully with it.
But do you think that India Inc. is prepared for both scenario, both outcomes? First, of course, no deal, which could trigger 26% of retaliatory tariff. The second, of course, if an initial or first tranche, you can say, will happen, that may or may not advantageous to, industry. You think the preparation is there?
Yeah, I think, listen, I think people do their own scenario planning. And some of the things are more shorter term things, tactical things that companies do. And I think I'm sure quite a few of them are preparing for that. And some are more longer term structural changes that happen. And that I think people will want to find out what actually plays out. As far as the short term fixes are concerned, definitely people are involved. I think a lot of people have also understood what the opportunities are. They've also understood what the competitive landscape is. So to that extent, definitely there is work that's going on. And there's also a reverse side of it where, US companies would be looking at trading more with India, investing more in India. And there are some sectors where the competitiveness of Indian companies may not be as much because of some natural advantages as US. So to that extent also, those companies also, if the trade deal were to be signed, will have to be prepared for how they deal with a situation where tariffs suddenly come down by 15-20%.
But sir, some of the contentious point which has emerged so far in the ongoing talks is on the points like agri, on the points like dairy products, GM crops. So do you think that the government stand, which is quite firm on these aspects, you think it's a right stand and they should continue with that and of course in the national interest?
Yes. I mean, I think, agri sectors like dairy and some of the others that you mentioned are very sensitive. Large parts of Indian population are dependent on this. So to have a broad sweeping change is something that's not desirable and probably not implementable as well. So, and definitely government will not do anything which is not in the broader interest of people. Now, there could be some areas where through quota restrictions or some controls, you could open up some of the areas where the competition may not be that direct or there may not be that much of overlaps. But you ensure that the checks and balances are there and there are QCRs that are there because of which the total import doesn't exceed a certain quantity, doesn't exceed a certain value. Now that they may do to ensure that, both the sides benefit.
Correct.
And there is no one who ends up losing in the process.
But at the same time, there are, discussion around that, the WTA stand, which, India has kind of proposed. Out of curiosity, I'm asking, when the deal is already ongoing, there is no conclusion so far. Of course, the stalemate continues. But then why you think India has, saying WTA that we are also preparing for retaliatory tariff action?
And this is part of strategic negotiations. Very difficult to comment on that, but I think whatever I would say, I mean, as I've told you, whatever interactions I have seen, I think they're thought through, very calibrated, and various senior members and officials of government are involved in this. So
But inferences could be drawn that there could be some changes in the earlier thought process as far as deal is concerned. Maybe it's not going the way it should be. So that's the inferences we can draw.
I'm not in the
Moving on.
business of speculating on this. When it happens, I think most important thing is when it happens, I think it should be something which I'm sure it will be beneficial to India, beneficial to both the countries, and in the interest of the overall economic growth in India.
So moving on the China story, we have seen a lot of tightening on the stand of China in terms of first putting export restrictions on rare earth and specialized fertilizer. Now we are seeing some recalling happening as far as Foxconn is concerned, which may have a very large impact on the manufacturing sector. How are you seeing these development, and how this will impact the domestic industries?
I would say that there have also been moves where some positive moves on the India-China side also. There was some talk of the daily flight resumption, some visits by leaders of both countries. So I think there are moves that have happened on both sides. And why I'm saying this, Srini, is that India-China is a very complex relationship, and it has multiple layers to the relationship. Why something happens here, the reason may be somewhere else. The reason may be that there's some other negotiation happening somewhere. Reason maybe there's some other event happening. Something else happened somewhere. So or someone else. So it's a bit like playing carom, where you hit and where it goes is a different play game. So our only feedback on this is we really follow what the government is saying, what the government is doing. They have a much better picture of what the multiple moving parts are, and as they advise and as they look at it, I think as CII we follow that. So yes, you're right that rare earth issue is a real issue which will impact some industries, particularly auto and EV. I'm not that much aware on the Foxconn issue. What's the gravity of that, and can that be done? Can it be replaced and everything else? I think I'm sure that should be probably resolvable. And again, as I said, that action may be because of some other action somewhere else. The rare earth kind of issues or other areas where supply chain resilience is something.
And also where we are very dependent
vulnerable on China or could be any other country.
Any other country.
Yeah, I think we have to be very clear that, in this world, in the current world order, to have supply chain vulnerabilities is not exposes you to certain risk. And a lot of these issues are not short-term fixes. One needs to work very hard in a very structured way to eventually accomplish that. So I think government and industry need to work together in these areas to try and see how we ensure that future supply chain shocks are limited to the extent that they can be managed, and the investment in terms of capital, resources, policy changes, incentives, technology partnerships, PLI, other things, whatever needs to be done should be done at the earliest.
Well, we are, I'm sure government is focusing on the external headwinds, but in-house also some reforms seems to be, taking some shape here. So in terms of GST, everyone is now talking about the rate rationalization. In fact, Minister also said, Finance Minister, that this is the time to go for rate rationalization, and that could be perhaps one of the agenda in the upcoming GST Council meeting as and when it happens. So one of the important aspects is to, eliminate the 12% GST rate to move towards 3-tier structure from the current 4-tier structure. What's your take on that? And you think this is the right time to rationalize the rates to kind of, push consumption, which is showing some sort of drag
Yeah. So I would, say, at least my view is that GST has probably been one of the most successful reforms that the government has done. And also probably one of the most complex because, you have states, center, everyone involved. The legislation has been there for 8 years. There has been a lot of changes that have happened. Technology has played a very critical role in the success of GST. And I think it's really helped in the formalization of the Indian economy. But as the GST matures, as we have more and more technology, as we learn more and more with the experiences, I think it's the right time for next version or GST 2.0. From CII standpoint,